We always sort of take the lay of the land, talk about what the state of stocks is, how much juice is left in the rally. That's a big question on the mind of people. You've got virus cases going up. You've got vaccine rollout slower than expected. What's on the flip side of that? A lot of optimism about what 2021 is going to bring. As Ed Hyman, Joe, the famed Ed Hyman, said the other day on the network, there's just so much stimulus in the system. So set the stage for us for 2021. It's the big question on everybody's mind.
I share in the optimism, and I would say it's almost as if when I'm managing my portfolio, I'm the head coach of a basketball team. I feel very confident that my team is going to win, but I'm not sure how I'm going to really distribute the minutes. I'm going to distribute those minutes as we begin to play. I've got 5 players out on the court, and each one of them can be an all-star. So I'm very focused in my actions recently in making sure that I'm gaining exposure to equities, not just in my favorite sectors, which would be technology or healthcare, but I'm finding opportunities in industrials. I added Cintas recently. I'm finding opportunities even in real estate. I'm looking at a name, PLD, which is Prologis. I've added 2 energy names recently, as you know, Scott. So I am making sure that I am incredibly diversified within my equity exposure, because I don't think the S&P 500 in 2021 from a performance standpoint is going to look as bifurcated as it looked in 2020. Let me just finish with this last point. You've got 10 stocks in the S&P that were up triple digits in 2020. You have 200 stocks in the S&P in 2020 that are actually down year to date. I just can't see that we're going to see that type of formation in 2021. So I just want to ensure that I've got exposure across all 11 sectors.
All right, Steve Weiss, I'm going to stay with Joe's analogy because I like it. Are you going to feed the ball to the big man, so to speak? Are you going to go to tech? Because Nasdaq was the big man. Nasdaq's up 43% this year, on pace now, according to Bespoke. I got a double take here. Nasdaq's on pace for back-to-back 40+% years. That's the first time since 1999. Now, granted, in 1998 and 99, we were talking about 70+% gains for tech. Where are you going to give the ball, Steve?
Well, I'm going to give the ball to me. I'm going to be the player coach and just stay with what's been working for me. I haven't been involved in the Zooms. I haven't been involved in any of those that have had these ridiculous runs and helped elevate the NASDAQ. I still like themes, and the theme that I'm most favorably impressed by this year and next year, and we haven't really even seen the uptake, is 5G. So that's technology. But it's not just technology. It's other tech. It's not just 5G technology. It's other technology that makes us more productive, that makes us more efficient. The labor losses that we've seen, unfortunately, a lot of them are not going to be replaced because we've gone more to technology. We've been forced to, and we're seeing what it does. So I think that works. To Joe's point, I do think some industrials will work as well. That's why I'm there. So there are still values under the market, and just because I'm going to dust off an old phrase, I don't really care where stocks have come from. I only care where they're going to. I'm not a fan of energy. I'll disagree. Joe and I agree with a lot of stuff. I'm not a fan of energy. I just don't like being in partnership with Saudi Arabia, with Russia, not having control over it, and with having private equity, this unlimited pool that keeps funding these companies that should go bankrupt. So I'm staying with what got me here, and I'm going to continue to be there and add to it as we go through 2021.